All right, welcome back to the channel, everyone. It's been a few days, but then again, not much has changed in the world of HEX, but welcome back to the channel. My name is Gerardo. We're going to be talking about HEX in this video and discussing the simple fact that it remains on track. It remains on track to the inevitable, or what a lot of people would consider to be the inevitable $1 and beyond region. Why inevitability? No reason other than social consensus, right? And if you dive into, not trying to dive too deep into what is money, but people who are in crypto have begun to ask these kinds of questions, have begun to find answers to these kinds of questions, and you see reality express that answer as there are multiple currencies, right? So I'll leave it at that. But this is a beautiful chart. It's the chart of HEX ever since 2019 all the way to today, where we currently are now. And price has done incredible things. It's gone up 10,000x, right? From bottom to top, more or less. And we've dipped a measly, 40%? Not even. Let's take a measured move from our all-time high to, I mean, this wick, if you want to count it, 47%, but if you're looking at actual, candles, then you're looking more like 31%. So just about 30 to 40, if you could argue 47% dip. And this is expected, more or less, right? If you measure from wick to wick here, 63%. Again, these kind of flash crash wicks are kind of outliers. So statistically speaking, you could exclude them if you wanted to. So I guess we will. And we're looking at 35%, which is smaller than this back here. And it feels to me like people are freaking out more now than they were back here. Maybe it's an influx of new people, but if that is the case, know that all is well and expected, right? We've seen these kinds of dips. Look at that, 48%. And we don't have to even go back in time too far to see that this has happened on multiple occasions. 31%, that one wasn't too big, so we won't highlight it. But this one here was pretty decent, 48%, and so on. I'll just show you guys a few more to drive the point home. 45%, and we'll leave it after this one, right? Let's see. 55%. So ever since the beginning of the year, right, we've seen dips anywhere from 45% to 55%, and this one currently is, again, 34%, or you could argue to that wick 47%, but we're choosing not to. We're being fair. So could we see 28 cents? Sure. Could we even go as low as the top of this wick, 22 cents? Sure. Then again, there's no guarantee. Number one, there's no guarantees it will go there, and number two, if it were to go there, there's no guarantees that it will remain there for long enough, or that there will be room for you for your limit order. That's what some people don't fully always understand, that just because you have a limit order at a certain price, if price goes there, it doesn't guarantee you'll be filled. And this is, again, what a lot of people ask, like, hey, price, I saw price go there. I saw price actually wick beneath my limit order, but I wasn't filled. The reason being is, I believe it has to do with the actual size of the order. So if the one beneath you was filled, I think it gets priority, right? So I think price would wick beneath it, and let's say it wicked beneath it to a point where now someone is getting filled with the large order beneath yours, and let's say they got filled either right beneath or with some margin until yours was ready. Pretty sure you would see price go there again, but you might not necessarily get filled, if that makes sense. Actually, forget all of that. I don't really mess around with limit orders personally. Just call me crazy, but yeah, we'll just stick to the charts, right? We're not showing you guys how to make limit orders on here. I'm pretty sure 1inch.io actually got banned in the US. Got banned in the States. So that's pretty crummy. It's kind of too bad. But just kind of a side note, you probably want to use Uniswap instead, right? Just app.uniswap.org is the official site. So use that instead of 1inch. You don't want to use the MetaMask swap feature because they charge you an extra 0.8% just to route your orders. So just use Uniswap. But yeah, getting back on track here, we've seen dips anywhere from 45 to 55% dip. Again, what I was saying was there's no guarantee that price would remain low if it were to dip any lower than where we currently are. And where we currently are is within this sort of, here, let's get rid of all these real quick. Where we are now is inside of this bull flag looking thing where we have our pull and then we have a bullish consolidation pattern, aka either sideways or something like a falling wedge, falling parallel channel, ascending triangle, whatever. What are these numbers over here, you might be wondering? These are simply, really simply, the multiples we've seen after each of these bullish consolidation patterns that I've drawn. So for example, this move here was this first one, 8.5x. This subsequent move, very poorly drawn, right, was 50x. Right, this was a 2.3 and so on, right? I pretty much outlined the size of every one of these major rallies that preceded each respective bullish consolidation pattern. And if you take an average of all of these data points, you get something around 10x, right? So sure, you could argue this 50x kind of throws things, throws the average off. Yeah, it definitely throws the average off. So let's say you only had the 9 data points without the 50x, and you would get something like 50 over 9, which is something closer to like a 5.5x, right? So if you're more conservative, you could say, well, look, we're looking at, not expecting, but looking at a potential 5x, and that would be on par with historical moves that follow after bullish consolidation patterns. And so again, a 5x from here would be $1.50 or so. And if it were closer to the true average, including the outlier, then you know a 10x would be $3. So it would be a lot. It would be a major move. Now, one thing that makes me think this might be possible, let me bring up the 50-day moving average. Get rid of some of those drawings and show you why I'm talking about the 50-day moving average, because it's been the bottom, historically speaking, more or less for the last, let's say, year. And the reason I say for the last year is because obviously Big Payday was a fundamental event that changed the entire dynamics of HEX. And so it's oftentimes very appropriate to place a vertical line there. Excuse the second one. But I think you get the idea, right? That after this point in time was when HEX is more or less doing what it's designed to do, right? Because this is obviously a very logistical launch period where you have to take care of a lot of moving parts, and where a lot of those moving parts stop becoming a headache right after this point in time. So and you can even see that in the price chart, right? Price structure, market structure, this chart tends to just be an uptrend, right? It's been just a clear uptrend ever since Big Payday, which is incredible. And again, ever since Big Payday, once we came out of this, price behavior beneath the 50-day moving average for extended periods of time, like this region over here, which by the way, were incredible accumulation opportunities, this region over here, and even this one down here, and even this down here, if you extrapolate, ever since we got above it from these extended periods of time, we have not been beneath it for long. And if we have, it's been pretty much sideways, bottoming price action for like January. So basically all of this year, this price action here at the 2/3 of a penny level, then a very nice bounce. And then sure, we dipped right back into the same level, but once again, it was sideways, great reaccumulation before we had a nice extension above it. And we seem to continue having these extensions above this white curve. Once again, we came beneath it and only actually closed, I believe it was only like 1 or 2 candles. Three actually. So this one broke it, still closed above it, doesn't count. This one closed beneath it. This one did as well. This one didn't count as a full break above it, right? Because it was still halfway, similar to this. So this fourth one was the one that did break. So it only really closed 3 candles beneath it, as opposed to multiple weeks over here. And then again, we almost touched it right here. Actually wicked down to it here, but more or less it indicated the general reaccumulation region. This sacrifice period phase found a falling parallel channel right into this moving average, basically right on it. If we look at the low, 11.1 cents. And if we look at the moving average, it's 11 cents. So pretty much right on the money. Not only that, I think we were talking about, we were talking on the channel back in this region that this sort of ABC looked very similar to this, just a tiny, like a mini fractal of this, and a more bullish one because it was actually above the average as opposed to, what we just talked about beneath it. But we talked about that, and then lo and behold, we had our rally that we were calling for, and we're just on track. That's the title of the video because it seems to be the case. All right, we've had our bullish reaccumulation pattern currently, and we actually dipped beneath this moving average for the first time in a long time, which is why I bring it up. It's significant. Now this one over here, let's see. The 50-day MA was at 38.5 cents. Where did it open? Beneath it, 38.4 cents. So this candle here actually closed beneath it. It was the first one to close beneath it since back here, since April 27th of 2021 at 1.3 cents. Now we know this was a great buying opportunity. Is there any other convergence in terms of, is there anything happening now that happened back then in April of this year? And all you really have to do is, I'm gonna get rid of some of these bull flags, right? But I wanted to point this out. I already had it drawn somewhere, excuse all this. But this is what I'm trying to get at, is the RSI. I'll explain everything else. But we haven't been this low on the RSI since that same point, April 27th of 2021. So RSI coming down to the same region, price dipping beneath the 50-day MA for just a candle or two, right? Not only that, we are holding on, let's get rid of this 50-day MA, holding on these parabolic support structures that we've drawn. And these are short term because you know that we like to look at our regression rainbows. So if I pull up our regression rainbows, you see that these parabolic structures definitely break it in early next year. So I like to think these are short-term parabolic structures. So let me get rid of the rainbow and explain what I mean. Well, if you look at what's happened, right, especially with this blue support parabola, and I'm not the first one to draw this, by the way. A lot of people have drawn this probably with more precision as well. So I'm just kind of relaying the same idea, but it's a really, really nice curve if you look at it. Look at all these touch points. You have this region as a touch point, 2, you could argue 3, 4, 5, 6, 7, 8, 9, 10, 11, right? 11 touch points. So this is a really interesting curve to look at, and where it currently sits at now is about 33 cents to 40 cents. Well, actually, if we look at where it's at exactly right now, we're looking closer to 28 cents, right? But I'm assuming we might remain in this channel. Again, it's not guaranteed, but it looks like we're holding in this general channel of price performance. So, I mean, we'll keep an eye out, but if there was convergence, for example, into the end of the month at these levels, we're looking at pretty much 32 cents to 40 cents. So again, I don't know if 33 cents will break. If anything, I think 28, 29 cents would be probably the bottom, like really strong support. And I'm not counting wicks to the downside. And I don't even know if we have to go that low, right? Because we've already had, again, a lot of converging data points, like the RSI I pointed out, breaking beneath the 50-day MA, coming down to these parabolic regions of support. With the purple one, we have 1, 2, 3, 4, 5, 6, 7, like a bunch, like almost 10 touch points. So statistically speaking, we like to see that. Now, you might be wondering what these yellow circles are. So for that, let me bring up the risk metric. So the risk metric is something we like to look at here on the channel. It's more or less a heat map of sorts, right? I won't get into the technicals because we've talked about it many, many times, and you can actually see this on the website, right, under heat maps. So go ahead and read that. There's an entire summary on it. LookIntoHex.com/heat maps. But I drew this general blue rectangle because it seems to be support resistance. It seems to provide those sort of touch points. Now, this purple blow off top region, I like to point out because this indicator called it as a signal, right? Because we had a peak, and then when this indicator was already dipping and went beneath our 0.8 level was actually the top. So we had our peak first on the indicator, and then we had it on actual price, which is really cool. But other than that, right, other than that peak, we see that it was resistance here, right? And on price, it was this local top. It was resistance here, this blue rectangle, local top, resistance, local top, resistance, local top, and then finally holding this parabolic structure as support converged with holding this blue rectangle as support. And you can see that, sure, we've been forming lower lows. We've actually been forming lower lows on the risk metric, but that's a bullish divergence. That's a hidden bullish divergence in the sense that we've been forming higher lows with price, right? From 4 cents to 8 cents, so about a 2x, to 16 cents, about a 2x, to about 38 cents, a little over a 2x. So who's to say we don't see another, even if we don't see a bubble region like this, even if we don't see a move like that, even if we just see something like this, right? And then maybe come back down, form a lower low into December. There's just one scenario, just because we've seen kind of this mountain range going on. It could still correspond to forming a higher base. And if they've about 2x on average, the higher base would be maybe closer to 70 or 80 cents, right? So it might be over here. Maybe it's a move like this. We never know. But what does that say, right? It says $1 plus into end of the month, and then November 70 cents. So it could play out literally an infinite number of ways. And I just pointed out one out of infinity. If you do that division, it's 0, meaning that analysis was probably meaningless. But again, this is just for entertainment, no crystal ball, no financial advice. I have no clue what's going to happen. I'm pretty much just as lost as you are, other than I have cool tools to play with. So yeah, draw your own parabolas, I guess, if you want to attempt to chart this. But this is just one path, right? Backed by many touch points that could lead into a very bullish quarter 4, meaning we touch these upper levels, whether they be blue, purple, or pink, into the end of the year, corresponding to a few bucks, right? $1 to $5. It's not out of the cards. We've seen coins like Matic. We've seen coins like ADA, others, right? I can't name them off the top of my head. I don't let them occupy too much space in my mind, but I've seen them, right, go from a couple pennies up to $2, $3. So HEX is taking its time, perhaps because it doesn't have as many mainstream sources covering it, as many eyes on it as these other projects, but I think that it would shine under those kind of eyes. If we look at something like adoption, for example, we see that we've accomplished 10,000x with only about 66,000 stakers. Now, here's a chart that I haven't brought up actually in either a long time or never, and it's the HEX price versus staking. Let me zoom in a bit for y'all so you can see the detail. And this is obviously, they're scaled so that they're scaled to fit, I guess. Yeah, they're scaled to fit. Both axes being the HEX price and HEX stakers. And you can see how closely correlated they are. This led me to question how correlated are they? And there's a mathematical number that I came out with. Now, I shared this in the VIP video that I dropped on Sunday about 3 or 4 days ago. And that was that the correlation coefficient between the HEX price, right? HEX price action and the number of stakers is 0.87. Now, for those of you who are statistically inclined, mathematically gifted, or just have a vague intuition of what that means that HEX price is strongly correlated. And you can look this up. It is strongly correlated to HEX staking. And in one of the Telegram groups I'm in, Axis Alive actually provides a really cool chart overlaying HEX stakes with price, something like ending stakes, something cool. And it gives the same insight. It gives the same insight in the sense that it provides it more granular too, actually. So overlaying that with mine would look freaking awesome. But more or less, it gives you general trajectory. You can even see that HEX staking, sure, it's still going up, but its derivative is going down, meaning its slope is going down. So if it was going up like this, now it's going up at less of an incline, I guess, but it's still going up. But you can see that price reflected that by going sideways, right? It's pretty interesting. So the derivative of HEX staking changes, then like new stakers, then price might take a little bit of a lull. So pretty cool to see, and that was very fascinating to see that the actual mathematical, statistical correlation coefficient, this is a huge deal, was 0.87. Again, that's defined as a very strong positive correlation, meaning that, adoption helps. So if with just 66,000 stakers, we were able to achieve these kinds of prices, this chart says, look, with just 500,000 stakers, we could potentially look at very, very high levels. If you can't see this, this says it's $1,000. It might not necessarily coincide. I might have to rescale it. But, even if you're more conservative, you could say with just a few 100,000 stakers, meaning if we multiply our staker base by 4 or 5, we could be looking at $10 HEX. So mainstream outlets could help. Anyone that says otherwise might not necessarily understand how marketing works, right? The more eyes, the better is the point. But yeah, I think I'm going to finish off there because this video is getting a little longer than I expected. But yeah, let's just finish off with this. This is our lifetime maximum ROI. Reason I bring this up is because, this is nothing new, right? We're right on track, like the title of this video. Look, this was our launch phase, and we had these long periods before we saw new all-time highs. And then big payday rolled around, and look at that. The amount of time to get to new all-time highs, this was kind of our recovery period, I guess you could say. So pre-big payday, into big payday, post-big payday, after all of this kind of, trudging through molasses type phase, where things were just slow and consolidation took months and whatnot, and it often took months to get back to all-time high. Look at that. Ever since day 472 or so, it's been quite the opposite, where the amount of time it takes to get to new all-time highs is what over here was like 20 days. Over here it was 23 days. Over here it was 25, about 40 days. And currently we're sitting at about 24 days. All right. So we could, in theory, go sideways another 2 weeks, sideways or down, or back up, but not necessarily reaching all-time highs. Right. So we could see another 2 weeks until we get back into the 50 cent region if we want to stay on par with what we've been doing for the last year, more or less. So I'll keep you up to date. Thank you guys for the engagement on this recent tweet. I went a little out there and said I would delete my Twitter if HEX price doesn't hit $1.37 by end of the year. That just corresponds to blue on the regression rainbow, by the way. We literally tapped blue a few days ago. So it would be a very conservative double bubble into blue into the end of the year. But hey, this was really just kind of for engagement. I didn't think you guys would take this seriously, but now I feel like I have to actually do it if it doesn't hit it by then. But I'll keep you guys posted on that. People are saying they're not really seeing it. We got all sorts of very interesting responses. But yeah, we'll see. I'll keep you guys up to date on that bet. But I do appreciate the all the support on Twitter as well. So go ahead and follow that. Twitter.com/GerardDog, link in the description. Also t.me/LookIntoHex. We just crossed 1,000 members in there. So appreciate that. Some great convos going on in there. 1,060 members, over 100 people online. I think we're almost at 10,000 messages thrown in there total over time, like at 9,000 actually. But yeah, it's popping in there. So go join that if you haven't already. The Instagram is doing pretty well too. Instagram.com/LookIntoHex. But yeah, I'm gonna clock out. Thank you guys for watching. I hope the chart gets a little more interesting to watch other than the sideways action, so I can provide you guys with some cooler videos. But yeah, a lot of cool things to come. Been working a lot, busy behind the scenes. So yeah, just stay tuned. All right. Appreciate you watching. Subscribe if you haven't already. We're almost at 9,000 subscribers. Get this video to 1,000 likes and all that great stuff. Share it with someone you think would find value in it. Once again, thanks for watching. Catch you in the next videos. Peace.